Just to clarify off the bat why I'm doing this, uh, I don't have a position, first of all, but there are some personal bets amongst a couple people with me, and there's been some in the past, and those people have bowed out or blocked me or not paid up or whatever, and it doesn't matter, right? The thing I find ironic to all this is, had it been the other way around, they'd be, harping on, hey, pay me, posting everywhere for karma, hey, look, he's not paying me, etc., etc. That being said, let's just get to the facts. GME took a dive today. A lot of the market took a dive today, and it's because a lot of talk about the rate sensitivity FOMC. I'm not here to get your hopes up. If you think I'm pro MOAS, then you might want to just close the video out. But if you want a little bit of truth, data from a data perspective, then maybe you want to sit down and listen. And the reason why is because all over Superstonk and other parts of Reddit, you'll see people constantly challenging people, hey, if there's a counter DD, where's it at? Where's it at? Where's it at? And to be honest, they're out there. There's a bunch of good counter DD written, and there's a bunch of good pro DD written, but people don't look at those anymore. They only want the ones that promise them that they're going to be millionaires because, hey, I don't know what position you guys are in. I don't want to know. I'm not a financial advisor. None of this is financial advice. And I'm not just using that as a joke here like everyone else does. No. I don't have the qualifications. I will straight up tell you, I don't have them. I do trade in the market. I consider myself more of a day trader. A lot of people from this community think that we hate day traders, right? Well, it depends. Once you get more confident in your abilities of trading stock, you might want to day trade at some point in the future too, if you pursue this avenue, like if this is something you want to do. But as a wake-up call, I figured I'd share with some of you, like, I think a lot of you are lacking a lot in the financial literacy department, and you guys are all following people that also lack in the financial literacy department. And that being said, break off. Do your own homework. Do your own DD. Stop waiting for the next one to be written. Everybody talks about there's no quality DD anymore. And it's like, well, that's because maybe the people that were very data driven no longer see a reason to write DD. Or maybe because what they see isn't what people like anymore, so it immediately gets removed and downvoted. You gotta ask yourself about that. Things get censored, things get shifted around. Now that being said, I'm just gonna jump right back into the data, and that'll be that slash rant. I apologize for any of that. I'm not trying to hurt anyone's feelings. No, I'm not employed at any hedge fund. I never have been. I didn't go to school for finance, so I'm self-taught, and here we go. So obviously today was a terrible day. A lot of people are going to make up reasons as to why, but honestly, it's easy to find out. Now, the first thing I'm going to jump into is a lot of the market is options driven, and a lot of people don't know how options influence their stock. Say you only own shares, that's good and all, but the options are still influencing a possible move in your stock. So you need to understand these things and see how they're going to start pushing your stock around if you only own shares. And then you might understand more as to what's going on instead of following some conspiratorial tinfoil rabbit hole kind of idea. Now, aside from getting to know the options, I would heavily tell people to go and get the Implied Order book by Squeeze Metrics. Amazing piece of literature trying to teach everybody exactly what gamma squeezes and short squeezes how they can pan out, how things work to a certain degree in the market as a whole when you have options driven movements. So this is really great. Read, study it, download it. Another reason I guess I am reaching out is because I do see a lot of young, data-driven, very, very skilled coders or data analysts or whatever out there in these communities, and it's like because they're following someone else that might mislead them either by accident or intentionally. Basically, you're gonna end up applying your skills in the wrong direction, if you will. So go grab, and this is another great read by him. Short is long. Why a short can be long, and it explains how the market maker works, what his role is, everything. There's a Seeking Alpha article about the same thing, why short sales can or are bullish, right? I have some videos shared on my YouTube, and by no means none of this isn't a plug, but they're about the dark pools. They're about high frequency trading. And I think a lot of people get it wrong. They're like, oh no, we hate all of this. We hate all of this. And I feel that some of it is pushed by an agenda with certain people that got involved with the GameStop movement that are anti high frequency trading. And I can understand that. I can understand why they might have complaints and the need for more regulation. But at the same time, it doesn't mean that they should be able to have a say all either. There needs to be some sort of middle ground, because if not, you're going to lose out on a lot of liquidity. And I'm not trying to defend anyone, and I don't have a horse in this race. I don't care who wins. But another thing is, have the right websites. For example, this is one that it's free, doco.com. I'll share all these links below. Then you go look up GameStop, and then everybody's going to say, hey, no man, don't look it up here because of X, Y, Z. No, go to the shorts, and it'll tell you who shorted and roughly when, what prices, all that. And you can go look at the funds. You can probably go grab the filings yourself, the Edgar filings yourself, and there you go, you're done. You're doing your own due diligence. Now, people are going to tell you, oh, the data's from FINRA, it's self-reported, there's conspiratorial things going on. Well, don't just take one data point, cross-reference it. People talk about the FTDs all the time. Here's a website, sec.report, and then go look for the failed to deliver chart for GME. Now, if you want to see what made GameStop run up, is people wanted to short it into the ground per se, into bankruptcy. If you haven't heard this story, here it is. And you had failure to delivers in notorious amounts. At one point, when they're this high, 3.2 million, then it's going to be very hard to shake that away. And Ryan Cohen bought in, and these failure delivers were already stacked up. So then that's when you get this spike in price over here, following the FTDs. But if you go look at the current, where we're at currently, you're not, like, this is where it's hard to paint a picture for anybody else, because this is where GME's at currently. And it could shoot up. Maybe there is a reason that currently it's somewhat overshorted, but I don't personally subscribe to that. Recently there was a post about AMC going around about how there's, I think, 400K, and you can look it up here. Failure delivers, and while that might be accurate, look at how many there were back here. So then if you look at the proportions and then you start questioning, well, is 400K really that much? So it's 405,000 cumulative. Well, then you go to iBorrowDesk, and this might only be the borrow rate from Interactive Brokers, but it's at least a reference point. And when you see this fee, and when you see this many shares available, and you got a question, well, it's so highly shorted, why is the fee so low? And if you want to corroborate this data point with another data point, go into your broker software. I'm not suggesting anyone ever short, because it carries infinite risk, and I'm not a financial advisor. But just check with your broker how much it would cost, or what's the fee to borrow a share. Because some of the brokers will tell you, Interactive Brokers is one of those that will tell you before you short something, it will tell you what the fee is to borrow shares. Now, that being said, that's checking two data points next to each other. And then you have this one, which is nakedshortreport.com, and you can go see the volume. Instead of relying on someone else's weird charts that might not make sense to you, go grab an easy one and go from there and make your own. And again, these are all self-reported, sure, but when multiple data points start lining up and pointing in one direction, then you might want to question what's going on. This is another one, and you can change the time period, and you'll notice there's moments where, yes, the short volume got really high, but at the same time you got to look at what the proportion of volume is compared to, like, how much volume is being traded now to back then when it spiked. And these are all things that you should all look at. Anyone investing in any company should go to any of these websites and look up all these things. Going back to what I was saying about AMC, the problem is, so you have 400,000 shares failure to deliver, but there's 5.7 million shares available to borrow at this low fee. And that's where you gotta, again, go check with your broker if you can without actually doing the action, and then just look at these things. you should all try to understand and learn the Greeks at some point. It would help you if you plan on trading. Um, I'm going to start looking into a little bit harder data points right now, but there was a report just put out about the debt, and it's not completely negative, but it is saying that at some point they're going to need to raise cash to continue going forward. But immediately everybody labels it, oh, this is FUD. I don't think you guys actually know what FUD means when you guys say this. When you'll immediately label me as FUD as well. And here's the deal. It's FUD when it's actually not true. So if I had to give you guys an example, there was a short report that came out for MP Materials by a company, shorters called Grizzly. They immediately got wiped out. Like, I don't know if they closed their short position or whatever, but they got hosed because the price shot up because the report was fake. That was actually FUD. They tried to use data points that were outdated, not correct, or just factually lies at that point. Like, they were trying to say that this company was not profitable, that it's a big risk because of SPAC reasons, et cetera, et cetera. And if you go look at the chart, ever since they put the report out, it's done nothing but shoot up. Now, the reason I consider this strong FUD is because not only did they put their report out, but they got a bunch of Twitter personalities to run an ad about the short report, and they put hashtag ad in their tweet. And it's like, that doesn't make it any better. It doesn't make it better that you're taking money or you're getting some sort of benefit in order to run this, in order to post this bad data, in order to get people to sell or shake them out. I don't want to be that either. If your conviction in this company is still strong and you got on what you consider a good price, then by all means, do what you will. And if I don't want this to convince you either way. I just want people to get more data. And again, this is a little bit of a call out to those people saying, well, where's the counter, DD? And I'm saying, well, here it is. Sadly, here it is. I don't want to be the bearer of bad news. I haven't wanted to be for a while now, but that's what people label me as. And I'm like, no, I just try to stay factual to what I know, how I trade, and how it's benefited me. Now, again, I'm going to get into a little bit harder data points. And, well, sorry, because some people won't like what they see. I pay for a trading service. I consider it a really good one. I've gone through many before settling on this one. And if I have to show you the story of GME in a short fashion, I can talk to you specifically about the last run-up because I have those screenshots still saved. When it was a nice run-up. It really was. But the problem that we run into is it's like you could tell it was not going to be sustainable. So roughly this area is the one I want to talk about. So 250s, not a bad price. But the reason, if you follow options, you kind of see it coming. Now this is a Excel sheet of options that I was tracking for GME. I noticed this flow on the 1st of November, and then on the 11th is when I actually bought some contracts. That being said, I don't hold shares of GME, so I was merely along for the ride on the premiums on cash. So here's where I caught it. I put out a video analyzing the options chain where we had resistances and supports previously, things like that. I'm about to show another screenshot here. We'll just shift to it. This one was in the video. That's why it's a little blurry. Maybe now it's compressed, but I still have the video still on my YouTube. And this is in November, right? So this is buying in the dark pool. And everyone says, oh, well, GME, the dark pool's messing us up. And no, it's not. Sometimes it's insiders trading because they just don't want to shift the price too much for you. And that's all right. That's not a huge bad thing. I wouldn't want to be on the receiving end on insiders selling if there were no dark pool, I guess is a way I'd phrase it. So that being said, I noticed heavy buying. I noticed options on calls going up. It seems like a viable trade at that point to me, in my eyes. I did a couple other data points, et cetera, and I was committed to this because of this data I saw. But the problem that we run into is when I come back to this, I sold because I want profit. Sorry, like they're my calls wouldn't have mattered anyway. They were not gonna help the cause, I guess, or whatever it is things are going on about this. But then I saw put flow start coming in on the 16th of December, heavier than the calls. And then aside from that, you had dark pool selling. And it seems like they clipped the top. They were selling up in these areas. So that's when you have to ask yourself, well, they're playing the same game that I'm speaking about, which is they just want profits. And you got to ask yourself, well, those are big volumes of money moving. So it's either institutions and big investors like funds. That's not like that could still be those people, or it could just be someone that does happen to have a lot of money. Now people are riding these waves as well. Like you have market makers making the market, and then you have people like me. I picked up this flow over here, and those were 500K and then 600K in premiums, right? So I rode that flow. I didn't invest that much, but I saw that much being invested, and I ride it up. That being said, you all have to do these things and do your own due diligence, because if not, you're going to end up in a bad place. I don't mean to bring him up. I just want to point out something on a website he had over here, which is, this was when GameStop was on a high short interest stock website at 99.6% on August 21st, I guess. So that being said, my own personal tracking, I haven't seen it on that website since April, if I recall correctly. So that being said, definitely do your own homework. If this is when he tweeted the unbreakable tweet. I have my own, I guess, speculation about that, but a lot of you don't. For those of you that don't know who I am, like, I was able to read options on March 10th. I was reading the options flow very heavily leading into those days, same as dark pool. I put out my own thought of where we might go, and we went from 250. GME was trading on 250, and then it shot up to 344. And I clipped that as well, and then it immediately tanked down. And what I want to get at is, I try to be data driven. I don't want to give anybody a date or a price target. I want to say, go, if you need to, go get your own data source and trade on it. Do be careful what data source you get, because there are some out there that are, I think, trying to rake in money from this whole thing. They see the movement of retail, and they're like, oh, let's see how I can up my users or clients or whatnot. So do be wary on that. I just wanted to talk about one last thing, which is I have from 12/13 to now on options flow pulled up. Again, this is from my provider I pay for. I highly recommend it, but again, you don't have to. I'm not trying to sell anyone a product. I'm just talking about data, and I happen to have access because I pay for it. So that being said, if you go look at the call flow and the put flow, it's flipping a little bit bearish. And the reason why is, if you go look all the way back, you'll see it's a large influx of puts building from when I said in December. And they've just been scaling down. They'll take profit as the price goes down, and then buy new puts if they have to. That being said, I want to talk about maybe one last data point here, which is today's put flow and call flow, which is, if you notice, calls sold off, and if you notice, it's really bad because everyone's counting on these calls that are way out the money to be. I'll even filter it here. They're counting on this to help them drive the price up, but if they're being sold off, then that's not helping. And then you have puts being bought, obviously at prices that are in the money, so that will influence that around, push it around. Always do your own homework. I think if you're not if the people that are writing DD aren't even paying for data, and they're going to Yahoo Finance every day and trying to speculate off that, then they're going to get some things wrong. Not because it's not a knock at Yahoo Finance, but you can just always get more refined data depending on what you're willing to pay for. The reason I'm using this service, I love it. It's a really good service, but the next step up from this service to me would be something like Capital IQ, which, I'm not wanting to pay that price yet, or Bloomberg. I'm not wanting to subscribe to that just yet. Maybe someday in the future, but not quite there. That being said, I wish all of you luck. By no means is this, I don't think you should buy or sell. That's not on me. That's on you. I'm just saying maybe it's time for everyone to sit down and do their own DD instead of waiting for the next quote unquote good DD to come out. Because if that person is already in GME and they bought in high, then they might want to have a bias, or they might tend to have a bias without wanting to have it, and you don't know that. You need to look at everything from both perspectives. Don't brush something off just because it's a bearish stance, and don't brush something off just because it's a bullish stance either. I try looking at both sides of things always. I'm not a perfect trader. I have made mistakes, and I will continue to make them probably, but the thing is to learn from them. So I definitely wish all of you good luck. Maybe stop following random personalities that offer out things that they can't really deliver on. I've noticed a lot of them have brought up dates or write their own DD, and then I ask myself, well, is it because they've got other people in their families and lives wrapped up into it? I don't know. Again, good luck, stay safe. I forgot about this part. I figured I'd add this real quick in at the end here, but I've read most of the DD. One of the immediate replies that everybody hits me with is, have you even read the DD? And it's, yes, I've read a lot of them. I like using AI and machine learning for doing models and simulations, and I've actually ran a few on other people's DD as well as my own. That being said, it doesn't help that some of the DD is written off somebody else's back and somebody else's back, and if the foundation is bad, then everything's bad. And going forward, just do remember that, because it happens a lot. It happens more than you think. Someone will have a flawed data point, and then it'll just keep repeating. And then you have that thing where it's like someone told a story and the fish was X size, and then it just keeps growing and growing and growing. And I remember the original meme price target for Wall Street Bets was, I think, 420 with 69 cents, but it just kept growing from there. Please, again, always do your own due diligence. None of this is financial advice, and be careful who you follow or whatever. I'm going to leave you guys with one last snapshot. This is the last month roughly for GME. A quick snapshot, and I hope all of you stay safe out there and trade safely, and I wish you all the best of luck. Never ever financial advice.